Welcome to Copper's latest opening bell report. In this episode, we're diving deep into the sharp drop in Bitcoin exchange reserves. Is it a bullish signal, or is there more to it? Let's jump in. There's been a lot of noise lately about the massive drop in Bitcoin exchange reserves. While this is true, it's important to understand that not all supply withdrawals mean the same thing. Sometimes, supply is simply unavailable for sale, and that distinction is often overlooked, leading to speculative conclusions. So, what if the supply that's no longer visible on exchanges, the so-called reserve drawdown, has just shifted to other trading venues, like ETF vehicles? If a decline in exchange reserves is seen as bullish, why don't we consider the increasing ETF holdings as potentially bearish? When we look at both exchange reserves and ETF holdings together, under the umbrella of available for sale supply, the picture changes dramatically. In fact, the net reduction in available supply is only around 22,000 bitcoins. That's a stark contrast to the bullish narrative focused solely on the more than 500,000 bitcoin drop in exchange reserves. Since the launch of Bitcoin ETFs last year, available supply actually increased at least until the US presidential elections. This suggests that the price rise during that period had more to do with hype than fundamentals, as attention from market participants, the media, and even our own research team centred on ETF inflows. Now, while that attention has faded a bit, ETF flows still serve as a significant sentiment indicator. But let's not ignore the fundamentals. Since the US elections, the combined supply available for sale, as defined by exchange reserves and ETF holdings, has declined by over 340,000 bitcoins. However, only about 22,000 of those bitcoins have been removed from exchanges without flowing into ETFs. Supply is a complex puzzle, and exchange reserves and ETFs are only part of it. Bitcoin inflation since the ETF launch in January 2024 has added more than 250,000 bitcoins. So when you take inflation into account, there's actually a net supply overhang of about 228,000 bitcoins. On the demand side, let's talk about strategy formerly known as MicroStrategy. They've increased their holdings by 192% in 2024, going from 189,000 to a staggering 553,000 bitcoins. This alone offsets the inflation-driven overhang by 136,000 bitcoins, and that's not even counting other public companies adding bitcoin to their balance sheets. Beyond strategy, other private and public entities have acquired an additional 138,000 bitcoins. If we assume these holdings are long-term, the market supply available for sale has dropped by about 274,000 bitcoins, even after accounting for inflation. While that's a positive, it's only a 1.4% drawdown in the total circulating supply. This underscores Bitcoin's current reality. It depends on large players continuing to accumulate at or near record high prices. Strategy seems well positioned. Its largest buying spree happened post-election, when markets were optimistic about a favourable administration. Since the start of the year, Strategy has purchased 107,000 bitcoins, more than double the inflation rate. If they keep buying at this pace, they could acquire another 66,000 bitcoins before the US tariff pause ends. At current prices, that would bring their average purchase price to $71,000, still below the year's price low. But to do this, they'd need to raise over $3 billion, more than double their latest buying spree of $1.4 billion. The outcome of ongoing tariff and trade negotiations is critical. Bitcoin remains highly correlated to the US stock market, with a 2025 average correlation of 0.9 to the S&P 500. If markets start pricing in a last-minute deal, both asset classes could approach all-time highs, which, by the way, happened on the same day earlier this year. This suggests Bitcoin may not reach new record prices until July, a scenario that's well within reason. It's similar to what we saw on US election day, when Bitcoin was trading just below its previous high before catapulting to new levels. Interestingly, our research team ran a simulation study earlier this year, projecting possible Bitcoin price trajectories across various scenarios. One outcome, which closely mirrored last year's trading profile with 87% similarity, showed Bitcoin potentially breaking $72,000 before reaching new record highs in July. That model had just a 1.5% error rate for April's open, high, low, and close. If a similar statistical path unfolds and the trade war resolves positively, the simulation projected that Bitcoin could reach over $175,000 by year end before overheating sets in. Thanks for tuning in to Copper's Opening Bell. For more detailed information, don't forget to download our full report. See you next time.